Hello everybody, Brian here from quantlabs.net. It's Brian here. I just want to go over 3 stories I came across earlier tonight about 3 topics. Gold potentially collapsing. We also have Chinese market defaults with some energy providers, and just a general market crash synopsis. You can get the links down below in the description of this video. So let's go to the browser here and check out some of the situations going on. Alrighty, so the first one here is BNN. Now these are AAA rated. I gotta make sure I get this properly. Here we go. Okay, so these are triple rated bonds tumbling. China default spread fear. The fear spread. So this is from Bloomberg out of Canada, BNN, Business News Network. We have a number here called, I'm not going to pronounce these, but these ones right here. So they're rated AAA. Have tumbled by 8% since November 10th. State-owned Chinese coal producers freshed out on the implicit guarantees that long underpin government-backed borrowers. Now, we've heard this before through a variety of Chinese, Westerners that don't believe in China, and they said this was coming. So, here's a couple of things. Most of the onshore bonds are hit hardest. Common symptom: profitability is lagged, blah, 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 blah. So here's when you have these things in trouble. Didn't answer calls, okay, or an email. Declined to comment further. Declined to comment when reached by the phone. So there's a lot of worry, cautious about liquidity. And this one really caught my attention, because if that's the case where China may default, what else is there? And these are, again, AAA rated from the Chinese government, backed by the Chinese government. And here we have some potential problems on the liquidity side of these bonds issued by the Chinese government. Okay, so again, the description is available in the description of this video link. Alright, so let's take a look at another one here. This is the second one. This is about the Canadian market. I do believe that this will, again, this is from the Motley Fool. This is from Motley Fool Canada, focusing on the Canadian market. Now, I'm sure this can be said right across global. If you've not seen my video I put up earlier today where I talked about, I might actually do another one right now regarding the Asian and European markets live while I'm here at my time, 2:12 a.m. going into, I believe it's November 24th. So there's this one. So here we have a rally happening. Okay, one thing that a lot of the frat boys over at what's that broker called, Robinhood, are going to be up for a wake-up call. So we've had certain Canadian, now these again Canadian market sectors, IT up 38%, materials up 16%, industrials up 13%. Our biggest stock right now, market cap wise in Canada, is Shopify. So you got some companies here like Northwest Company paying out a dividend, which a lot of people are using. We have a multinational grocery chain, blah, 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 blah. And things are starting to trend because of the, they're trying to, no different in the States, depend on the COVID-19 vaccine, which people are not sure about, which starts to scare people. We've got, in our case, in Toronto, Ontario, Canada, right across the country actually, rising infections and return to lockdowns, which we are effective as of. So that might sound familiar. So that's what may kill off the market. Okay, So let's keep that in mind. So I wouldn't be surprised that could be said with the U.S. as well as time marches on. Okay, let's continue along with our last story. Now this one is pretty scary. Hopefully it'll load up. Okay, so the name of the article was Gold. Now if you know SWOT analysis, weaknesses, opportunities, and threats. Bullion at risk of major collapse. That's the headline here. Major collapse. Now, as you can see here, the site at Kiko, which is the largest issuer of gold in Canada. I have the article in front of me, and again, you can get that in the description. But what it says here, I'm only going to focus on weaknesses. A couple of things. Reason why we're seeing gold crash. Gold-backed ETF sold off in a fifth straight session on Wednesday. Have lost 52 tons since of gold since Pfizer announced its vaccine breakthrough last week, sparking fears that investors, are giving up on gold as potentially heads back to $1,700. So it went up to $2,300 back in March in the crash. Didn't go up a lot. It should have gone up a lot more when you look at Bitcoin. We'll talk about Bitcoin in a minute. And they're expecting it may go back down to $1,700. So it could be a bloodbath for a lot of people that are invested in gold. Money managers are turning bearish on yellow metal. Bullish gold bets decreased by 10,944 net long positions according to the weekly CFTC data on futures and options. The least bullish net long position is more than 17 months, according to Bloomberg. So what's happening there with the CFTC, which comes out every week, and I can confirm it on my analysis myself, which I did this morning. Gold is having some shorts. The only currencies right now, or as of this morning, it was gold in Swiss franc and gold in Canadian dollars where there's a long. Everything else was shorting. This Australian bank, Macquarie, gold prices have already peaked at their August high of 2,075. So that's the highest that ever went. Banks said prices are likely to remain around current levels, which it's been doing, kind of sideways, moving lower over 2021 as a 10-year Treasury yield rises towards 2%. That's why if you watch my video, you'll see that the Treasury on all maturities, 2-year, 5-year, 10-year, 50-year, have gone up, stayed up, as well as now, just recently, the UK gilt has been added to that list as well. So there's that. Now, as I said, what are the threats? Bullion is at risk of major collapse, in quotes, continues to falter. 100-day and 50-day moving average for gold crossed what they call the death cross. Okay, the death cross is not a good thing, which is indicative of a sharp drop down. So when you start to get these death crosses, both on the 50-day, 100, you can start to figure out that gold's not the place to be. So as of the last 2 days, application for U.S. state unemployment rose unexpectedly, first time in 5 weeks, suggesting labor market claims is slowly due to spiking coronavirus infections. Claims 742,000 November 14th, up 31,000 week prior. Now this is the U.S. Okay, has 11.8 million cases in the states. This is crazy. So it's another thing that's killing off the U.S. markets. But here's the scary part. Benefit for Bitcoin, benefit for crypto, which I'm also tracking. And if you've been on my webinar tonight, this is another big reason why Bitcoin's on the rise. Now, this is BlackRock, the largest asset manager in the world. I think they manage over $4 trillion. The CIO of fixed income, Rick Ryder, said on CNBC that Bitcoin could take the place of gold as due to a large extent because crypto is so much more functional than passing a bar of gold around. Okay, so basically that means that crypto's more liquid. Crypto's more transferable with blockchain technology. You can get all that technology within minutes or up to hours, depending on which coin. And this guy also added, thinks that crypto is here to stay. And of course, he was saying that central banks develop their own digital currencies, and millennials are starting to get used to this type of technology. So that says right there that Bitcoin and crypto is here to stay, and that's coming from BlackRock, largest CIO out there. Okay, so again, it's pretty exciting for Bitcoin. Bitcoin's added, I don't know, another $1,000 in the last few days, and it's legging up each $1,000, 17, 18, 19,000. So with the Bitcoin, so it's another reason why to get into Bitcoin and to do what I do, where I've said if you were on November 11th starting with one Bitcoin at 16 grand, you would be up 2.6 times, 260 times. If you want to know more, I've got in the description, just set up some questions and we can talk if you want. And I'll tell you what's going on with this bot, how to get and reap the benefits from it. So if you're interested, just go over to this quantlabs.net/questions. I do believe it is in the description, and you can go from there, and this is where you send it. Also, what I would recommend, if you want, you can just visit our WhatsApp group as well and join there to further get the conversation with not just me, but with other people in the group. All right, so I'm going to leave it at that. Let me see if there's anybody in the chat said anything. Nothing. So we'll leave it at that. So what I'll do is I'll sign off now. I'll come back with another live stream looking at the markets like I did in this video here. Market analysis November 23rd, midday. So I'm going to do one now as well with the Wanda data using MotiveWave. And again, let me also stress as well, if you want to and interested in MotiveWave, they got a great sale on up for Black Friday, 30% off starting November 24th to the 30th, and you can get 30% off on most of their product at motivewave.com. So that's up until over Black Friday, Cyber Monday. So we'll leave it at that. Thanks for watching. Have yourselves a good day. Take it easy.